All right, folks, space stocks, they're still pulling back. You can see this chart here. Remember that after the Blue Origin disaster last week, but at some point, the focus is going to shift back to SpaceX, which is scheduled to be the biggest IPO in history. They're rewriting a lot of rules about this to accommodate its size and the demand for it. And each week, I got to tell you, more and more people ask me if I would be a buyer. Joining me now, Adrian Helfert. He's the CIO of Wealth Alternative and Multi-Asset Portfolios at Westwood. And Adrian, I'm sure everyone's asking you the same question. Would you be a buyer on IPO day, the day they go public?
The day they go public, if you could get in at the IPO price, you're probably going to have to be involved. And the reason is that you're going to see a squeeze, I think, of a large portion of the float of SpaceX is going to get taken down by passive investors.
Right.
Almost half of the float.
Right.
You recall the float is only about 4% of the market cap of this company. So passive investors are going to be required to come in and actually start buying that if they're going to be on their index.
Right, that's the thing, right? It's going to be in the S&P. The fix is in, $30 billion a month. A large portion of that will go to the stock automatically because it's going to have a $2 trillion valuation. And so let's just say it opens up 50% higher, whatever it does. Does it behoove most of the viewers to wait just a little bit or just dive in there? Because I think people are eager just to dive in there.
I would probably wait. I think what's going to happen, well, number one, you've already seen a lot of value creation in private markets. Right. And that's kind of what's happened. Right. It's nice it's opened up to the retail investor. It's nice that we're starting to see some of this value creation in space stocks generally more available to the investor that's the retail investor, not involved there. Right. But we're going to see a pressure right at the outset of that IPO, I believe, because of the amount of index buying that's going to come in. I want to see that settle before I truly get involved.
So your YLDW, you capture both sides of income layer and growth layer, and this will present an opportunity for both sides, for both parts of your approach?
Certainly. One thing we take advantage of is volatility in the markets.
Right.
The ups and downs. We want that, and it's a rarity to find that. We can do that through covered call strategies. SpaceX is an interesting opportunity. We get growth in terms of the paradigm of we're going to see more growth in space and space infrastructure. That's what we're seeing is this build out of the infrastructure layer, and it's going to move up and down, and I can clip a coupon on the back of that. So that's something we can take advantage of.
Let's talk about your holdings. The top stock, individual stock that I saw happened to be Dell. I'm pretty sure you were in it before all of the big news last week. My prior guest was in it also, but he said they took profits. What are you doing?
I am holding on to Dell right now. It's extraordinary what we just saw in earnings. This was not just the hyperscalers, this was a broadening beyond the hyperscalers for them. If you just look at their server capacity, their AI-driven server growth, up 760% year on year. If you look outside that of just CPU growth, they're doing very well across all of the stack. That's good for two things. That's good for Dell, of course. I want to be involved in that piece of the infrastructure layer that's growing, number one. Number two, I'm looking at the broadening of the market of this narrative of AI growth and infrastructure build that we've seen and saying, is it going to perpetuate? And Dell is telling us, yes, it is.
I mean, it was a top holding, but did you anticipate this? Why did you buy it?
I didn't anticipate up 30% on Friday, otherwise I would have been all in. But I'm happy to see that it is. We bought it because it's a key piece of the infrastructure. Right. It's a key piece of the PC and the server layer that is going to propagate this out. If we see more than just those large corporate, those large hyperscaler consumers use AI, which we have to if we're going to see the valuations make any sense, then Dell is going to be a key piece of that. That's why we bought.
NVIDIA, you have a big position in there. Cisco is another one of these old, Cisco, Oracle, again, these older names that at some point in the last couple of years, most people kind of gave up on. They've had this massive resurgence, and you were already positioned in them.
We did. Oracle is also, you think about that stack, it's kind of like a 5-layer cake. At the top, you've got the software layer. Gosh, we saw a day-to-day on the SaaS, on the software layer. I would caution you on that to not get too exuberant. Names like Salesforce, they're still down 17% on the year after today. You look at the other stuff where you're going to find the bottlenecks in that infrastructure build. It's going to be in the data layer. It's going to be in the energy layer, and it's going to be in areas like cooling systems for water and server stacks. That's Dell, that's Oracle. You start to look at commodities, we'll see that as well.
I got 30 seconds. You have Gilead in here, which is sort of, when I used to watch Sesame Street as a kid, one of the things is not like the other. But there's a lot of excitement about the biotech space. Why do you have Dell in the midst of all of these other, more high-tech names?
Still like the income. Gilead is a very strong cash flow producing and returning security for us, and it provides a little bit of a buffer. It also is involved in some key drugs that are coming out. It's got a large aggregation risk. So we like having things across the spectrum. Just because it's a thematic, that doesn't make a portfolio. We want a diversified portfolio.
I got you. Yeah, and this patent crisis with the big drug companies makes a lot of these other names look somewhat attractive.
Agreed.
Adrian, good stuff. Appreciate it.
Thank you very much.